Joining me now is Steve Odland, President and CEO of the Conference Board and a CNBC contributor. So how should we be thinking about this? The jobs will be transformed by AI. That doesn't necessarily mean they'll be replaced by AI, right?
Yeah, well, that's right, Leslie. I think you have to look at this in context. First of all, AI is software. It's ones and zeros. It is the next phase of digital transformation. It reminds me of the 80s when, personal computers were evolving, putting on people's desks, and then you had to have some software to run it. And it made people more productive. The whole secretarial or administrative staff was converted, and that went away. So these kind of evolutions have happened, continuously over our careers and certainly over the last 100 years. This is just the next phase. So AI is a concern of CEOs. Mostly, the highest concern is that others will get there first and therefore establish a competitive advantage. That's the number one concern. People are spending these outrageous amounts of money. None of it's paying out yet. So they're all going, well, where's the payout? I got to get there. I've got to spend the money, but where's the payout here? So their point of view is that, yeah, over the next 5 years or so, it's going to impact about half the jobs. We can see that. We're not sure exactly how, but it certainly should improve productivity.
Yeah, it may not be negative necessarily. That said, this all comes against this backdrop where we've seen a slew of layoff news. Morning Brew compiled the ones that we've seen over just the last week. PwC, 5,600, UPS, 48,000, Chegg, 45% of its workforce, Target, 1,800, Amazon, we just talked about it, Paramount, 2,000, over 2 rounds of layoffs. And one thing I think we need to understand is this, jobs being supplanted or transformed by AI, or do you think this is just indicative of a weakening labor market?
I think it's a weakening labor market. Yeah, I mean, everybody's using AI in the mix here because it sounds good. There's very little evidence that AI has taken anybody's job yet. Okay, there's a couple forms here that are being, used. Agentic AI is becoming an agent of whatever. So it's automation. It's the next phase of automation with robots and so forth. That's what Amazon's talking about in their warehouses, for example. And then you have, you've got generative AI, which is creativity. It doesn't supplant all creativity. It just makes it faster. The kinds of things that we're seeing in terms of layoffs are where people got out over their skis, either post-COVID or for whatever reason they over-invested or the economy is not growing as fast, and you're seeing paring back because of that. So I think that people are conflating two separate issues here as they're looking at what's going on.
Yeah, and so maybe that begs the question, when we do see a real downturn, and cycles happen, they do happen, eventually we will see one. Is that the time that you expect companies to really lean in and go, full force in terms of replacing their workforce with technology in order to garner those efficiencies when the economy isn't doing as well?
Well, I think everybody's experimenting with it now to figure out how to do that. We have a situation right now that's two economies. The high-end consumer confidence index from the Conference Board was just introduced this morning, they updated this morning. There are two economies going on here. The older, wealthier people are sitting on a lot of assets. The stock market's at an all-time high. The housing market is very high, so they're asset rich. They're doing fine. They're spending fine. It's the lower end of the demographic scale, people who are earning less, more junior in their career, who are having trouble here. 2/3 of all the households in America live paycheck to paycheck, and this is where the squeeze is. Also with the government workers and the government slowdown, but it's a general issue here. So it's the low end with inflation, and those are the worries that are dealing with. And I think the slowdown in consumer spending because of that is now driving companies to have to pare back to adjust to a different growth rate in the economy.